Hey everyone, it's Karen, and today I wanted to talk a little bit about some conversations that I had last week at the American Century Golf Tournament in Lake Tahoe. There I was at this golf tournament. It was beautiful in Lake Tahoe, and I was chatting with some people there in the booth that I was sponsoring about homeownership, and we were talking about homeownership and gas prices and interest rates. And so I just wanted to fill you in a little bit about that conversation. So we had initially started the conversation talking about gas prices. I live in Utah, and I happen to be in both California and Nevada while in Tahoe. And the prices were hovering around $1 more than what they are in Utah. And I was so excited to tell my new friends that I actually got my gas at Costco, and where it was only 484 versus in Park City where it was, I think, 520, compared to Lake Tahoe where it was 659. And I was explaining to them like, oh God, like I don't know if I can drive enough. I could have driven to Tahoe, but of course now I'm looking at what am I paying for gas, and do I actually need to take that trip? Now, obviously, driving 550 miles to Tahoe is one thing, but questioning, should I be going to the grocery store? Should I be going to my office? These are all things that are coming up in my mind now that I have to pay more for gas. Total side note, in 2020, in July, like right around now, I happened to be in Washington, D.C., and I took a snapshot, and it just came up on my Facebook page, of what the prices were back then. And they were $1.85. $1.85. And now I'm paying like almost $5. So it's incredible to think about how much these numbers have soared. But let's talk about that. So 2020 gas prices $1.85. Now they're $4.85. 2020 home prices, just as an example, one home that I recently saw sold for $550,000 in 2020 and is now worth about $725. So obviously we can see that home prices have gone up, as well as gas prices. But what's also gone up is interest rates. So putting a correlation between gas prices and interest rates, the key question here is, will the increase in interest rates deter the average buyer from purchasing a home? Now, I've read through stats and I've seen that interest rates have generally changed a lot, decade by decade. Where they were the highest, I'm just going to pull up my numbers here. In 2000, and sorry, in 1970s, in the 70s, they were hovering around almost 9%. In the 80s, they were over 12.7%, 90s, 8.12%, 2006 and a quarter, and obviously in the 2010 decade, around 4, and most recently just hovering around that 2-3%. So now even being back at 5%, even 6%, is still lower than they were in the early 2000s. So let's be straight here. I know that rising interest rates does impact the average buyer. It definitely impacts their purchase power. It impacts how much they have to spend per month. I do the math all the time to run the numbers to see what it'll cost, whether my clients, whether they even pay cash or whether they're going to finance even a small amount. And we run through those numbers to see what is that going to cost them. And there is a little bit of a reminder that I have to tell them is that, these rates, just like gas prices, they fluctuate. So you're really not like getting into bed with the interest rate other than for that initial, maybe, it doesn't make sense necessarily to refinance, until you talk to your professional advisor. But oftentimes that there is, you'll usually see some kind of financial benefit when you refinance. But long and short of it is that you don't have to get in bed with that interest rate for the long term. We're not talking marriage here, right? We're talking dating material. So I encourage my buyers to really think about buying and the benefits of buying. So maybe you do get a slightly higher interest rate, but you get that home that's your dream home. And maybe you are paying a little bit more at the beginning, but there are certainly benefits out there. And I just wanted to share some of them with you. So, number one benefit is you do have that fixed cost, right? So, you have the mortgage, you have your HOA, you have your taxes. Obviously, taxes and the HOA can adjust, but in terms of the mortgage, that stays stable. At the golf tournament, I was chatting with some people who said, we don't want to take responsibility for the house, and I'm not home that much, and I don't want to have the responsibility to fix and make the repairs, etc. And I thought, well, I'm wondering, like, how many repairs do you have? Like, I've owned two different homes, and I don't really have that many repairs, or the maintenance of it, it's not that drastic. So for me, that makes sense, but I totally understand it from their perspective, and that is something that they really don't want to take on. But think about how much maintenance does the average home need. Another benefit is the equity that you're building. So that person that bought that home for 500,000, 550,000, and it's now worth seven and a quarter. Look at all that equity. And I don't know how much they put down, but let's assume at least 25%, like, to refinance and take cash out of that to put it into a different property. I mean, that's a huge benefit, right? That's like your money working for you, and you're just living in this home, right? So that's definitely one thing. It's a long-term savings plan, right? Owning a home is not about flipping. It's about living. It's about living. And the average homeowner lives in their home for 10 years. 10 years. That is your savings. Like, you're building your savings, and you don't have to consistently be putting money into it. So you're building your wealth, you're building the savings. Obviously, all of that is great. You're helping your credit score, actually. So when you take out credit, when you take out money and you have this mortgage, your credit score gets impacted. But the longer you pay it, and even the higher the number, if you will, the higher your credit can be, as long as you're paying it consistently. And I always suggest that if you're going to pay anybody, if you're not going to pay anybody, make sure that it is not the bank. You have to pay the bank, all right? Because the bank can hurt you the most. Your HOA can't hurt you that much. Your taxes can't hurt you that much immediately, but your bank can. So that's another benefit. Let's see what else we can come up with. I mean, you really have a lot of privacy when it comes to owning your own home as well. You can do with the home whatever you might like, obviously, with the caveat that you have to follow the HOA guidelines and any other guidelines that you have set in place. But you really have the ability to rent out a room, to set up an office, to work from your home, and to, quite frankly, know that, like, nobody's going to kick you out. So that is another benefit. So I'm going to cut it there. Hopefully that was helpful to you. If you're sitting on the fence and you're thinking, oh gosh, like, I have to pay for gas, I have higher interest rates, I have inflation, everything is costing me more. The reality is that when it comes to a home, historically speaking, other than during a few different times in the last, let's say, 40, 50 years, home prices have continued to go up. Home values have continued to go up. So even the person who bought that home in the 80s, that home is worth a lot more money now. So if you're thinking, I'm going to stay in this home for a while, this is where I'm going to set up roots. I hate to say it, but I would look into buying if you can afford it. Just like I wouldn't necessarily stop driving because gas prices are up. Yes, it's costing more, but do you want to sit home? We already did that for a couple of years. So let's get out there. Let's live life. Let's buy homes. And let's call me. You call me. If you've got questions about real estate, either in your market or anywhere else in the world, I would love to help you with your home real estate goals. Again, whether it's me helping you or connecting you with one of my fantastic referral partners all over the world. I look forward to seeing your comments down below. Make sure to like, heart, leave a comment, share this with somebody that might find it helpful, and I will see you back here next time.